growing up, my dad actually owned apartment buildings. So I would grow up going to his property tours, investor meetings, and even ran the books for him. It's really rewarding, even though I have nothing to do with it, just to see where it was from seed inception stage to where it is today.
Most investors don't fully understand the capital stack. Like, they
True.
don't understand how much of value a property can lose and be wiped out, and then their position be wiped out before the property actually goes to zero.
I don't think you can build real wealth by just leaving your money under a mattress. So instead of being scared to invest, how can I help empower you to be more confident in that investment decision?
The views expressed in this podcast are those of the individual guests and do not reflect the opinions or recommendations of Invest Clearly. This podcast is for informational purposes only and should not be considered investment advice. The appearance of a sponsor or investor on this show does not constitute an endorsement or a warning. Invest Clearly is an objective and neutral platform. Always do your own due diligence before making any investment decisions. All right, awesome. Bella, thank you so much for joining us. For the listeners, you were one of the first people I actually put Invest Clearly in front of early on. And we were joking because, from where we are today, from where we started, I literally put like a slide in front of you and I was like, hey, what do you think of this from when we were in a mastermind together? So it's really cool to reconnect with you on this. So thank you for joining.
Thank you for thinking of me and thank you for reaching out. It's really rewarding, even though I have nothing to do with it, just to see where it was from seed inception stage to where it is today. It's unbelievable and remarkable and a testament to the product, right? It's something that's needed and wanted. So congratulations to you and your growth.
I appreciate it. Awesome. And so why don't we take just a couple seconds to introduce yourself as well as Origin. You guys are one of the bigger players in the market. And so I'd love to kind of hear about your background. I know you are leading IR right now, if I'm not mistaken. And when we first started, you've moved up through the ranks. So I'd love to hear that journey.
Absolutely. I'll take you way back to young Bella. So growing up, my dad actually owned apartment buildings. So I would grow up going to his property tours, investor meetings, and even ran the books for him. So a silly example of where the spark of real estate and interest in real estate started for me. So ended up moving from Texas to Wisconsin for school because I had the opportunity to play soccer in college there. Ended up double majoring in real estate and finance. So the past 10 years, I've really been doing iterations of both. I started my first 4 years in an analyst role. So I rated commercial mortgage-backed securities for 2 years. And then I was an analyst for a family office out of Chicago for 2 years until a recruiter reached out to me about my current role at Origin, which I was intrigued by because it allowed me to still apply my real estate background with a more client-facing role. And so now at Origin for the past 6 years, I've been in client services, investor relations. So if anyone has a question about Origin's offerings, they would call me, email me. Really, I'm there to be a resource for them. And then at Origin, we really pride ourselves on a white glove level of service. So from there, I then make sure that our current clients are taken care of, making sure that every question they have is answered, or if they have anything that they need with their investment overall. And then aside from that, actually started my own podcast and community last year where I just help educate investors on the due diligence process. Because similar to Invest Clearly, I just want people to feel more confident in that investment decision. I don't think you can build real wealth by just leaving your money under a mattress. So instead of being scared to invest, how can I help empower you to be more confident in that investment decision?
That's fantastic. And that education aspect is so unbelievably necessary. The more people I talk to, the less educated you realize people are as a whole before making some of these commitments. It's wild, right? And it's like, it's just crazy. So that's awesome you're doing this. So talk to us a little about like, Origin is a behemoth. And so what do you guys do that really differentiates you guys from like a trust standpoint with investors? They get on the phone with you. And first of all, are you mainly raising from like retail, high net worth accredited investors? Or do you guys go the institutional family office route? And with that, what does that process look like from an educational standpoint when someone calls for the first time?
Sure, absolutely. So we do a lot of educational content. That's something that we really believe is important. So whether it's hosting regular webinars, which are led by members of our leadership team, or issuing quarterly reports, which a lot of folks do nowadays. We also have articles that we write. So whether it's thought leadership or, for example, more recently, how tariffs will impact construction pricing, how we're mitigating those risks, how the recent bill affects real estate, how our markets are being affected, just things like that, so that before someone gets on the phone with us, they have the ability, if they want, to see how Origin thinks, to help educate themselves, because we truly believe that if someone comes in educated, then it's up to them to make the final decision, and we want them to be as confident as they can be in that decision. So we think it's very important to lead with education first and be overinformed. We also have a comprehensive guide to real estate investing that I've heard have been very useful for prospective investors. So that's where I think it really starts in that ecosystem, just having a presence online and having that social capital to back it up.
Yeah, for sure. And your primary investor base, is it mainly the retail side of things?
That's right. You asked that question. I
Is that right?
apologize. So in our case, we do target retail investors, so high net worth accredited investors mostly. We also have recently started a program where we are forming partnerships with RIAs. So that's a bit of a newer, I guess, strategy that we're advocating for. But in its history since 2007, since inception, it's really been targeting high net worth retail investors.
Sure. And is the path towards the IRA just like bigger deals, bigger checks, or is it a shift in strategy, or is it just like an expansion of, I guess, interested capital? Like, what would you?
I would say it's a little bit of both. Certainly the expansion helps because one RIA relationship can lead to many. That being said, it is a longer due diligence process, as it should be. But something a little bit unique to Origin is that we're actually merging with an RIA company. And so through that, it's a two-way street where our RIAs can now confidently offer their clients with a solid real estate investment. And then on the other hand, we are now getting in front of potential new clients on the RIA side.
Yeah, that's awesome. And you're probably the biggest GP that we've had on the show so far. What do you think, I guess, separates your ability to scale, especially when it comes to investor trust, right? Like a lot of the individuals, I think I kind of joked before we got on the call, is like a lot of the people we're working with is, maybe sub 500 million. It's still maybe one person in IR, maybe founder led IR conversations, maybe one person in marketing. You guys have a full on, you're over 3 billion under management, if I'm not mistaken, and it's a full business practice. Like, what has separated your ability to scale like in that manner, do you think?
Sure. I don't know if it's different, but I do think we value the client first, whether it's experience or decision making. Everything we do is centered around our partners. So, for example, in March of 2020, which was pre-COVID era, we didn't know what environment was about to ensue, but our co-founders knew it probably wasn't positive and decided to kill our entire pipeline. So we had been working for months, sometimes years on a deal, but because we weren't willing to sacrifice that risk, we decided to just end it all until we had a little bit more clarity. So we just aren't afraid to make those decisions in the best risk-adjusted way possible. We also, like I alluded to earlier, want our partners to be as informed as possible. So we're hosting the webinars, the quarterly reports. You have someone that you can access at any time, and it's a real life human being. You're not going to be sent through the call center, press 1 for this, press 3 for this. So I recently have had stories of investors talking about other sponsors or other deals that they're a part of that are going south, and they can't get a hold of anyone. And it makes me sick to my stomach.
Yeah.
It's so sad. And the least you can do is be as transparent as possible. And so I think that's what I would attribute it to.
Yeah.
I don't know if it's true or not, but I think it goes a long way.
That is brutal. And it's a topic I feel like I touch on every single one of these calls, is because or these podcast episodes, is I talk to these investors and there are things going on with deals. Like it's not like a hidden thing, but people will get on the phone with me and bring up the loss of capital for like 10 seconds. And the rest of the time it's all about communication and how it's changed and they can't get a hold of the people. It's gut wrenching when you talk to individuals about that.
Even if it's bad news, like you have to be in front of the investor. You have to let them know what's going on.
Yeah, yeah, and that's not an easy decision that your founders made to just stop, especially at your size.
Right.
It's an operating business. It's tough to make that call, so it's wild that that happened. So, in terms of the portfolio as a whole, how are you guys performing currently? Walk me through that.
Sure. So we have 4 open funds right now. We have a credit offering, an income offering, and then the tax strategies. So QOZ and 1031. With 1031, it's a little bit newer, but you do have to acquire a property that's already built and performing. So it's more of a core property. So those properties are performing fine. Opportunity zones, depending on the vintage, it was tough to acquire properties back in 2022. But because we believe in our thesis, our business plan, our markets, which is, in my opinion, where the risk starts, over a 10-year investment horizon, we think that everything will be okay. And then for our credit fund, performing well as expected. Our income fund has never sacrificed a distribution.
That's great.
And not to say we haven't run into appraisal or lower appraisal values and things like that. But again, if you're holding it for the long term, we think it should recover rather quickly. Like I said, we haven't sacrificed a distribution, and that's because the income portfolio that we have is multifaceted. And that's done on purpose so that we can be nimble based on what the market environment is telling us. So when we first started back in 2019, the portfolio was made up of mostly common equity. Fast forward a few years, we don't believe in the cost of capital. We think everything's still overpriced. So we've now shifted the portfolio towards preferred equity. So we're getting, call it mid-teen returns. Values can still drop 30% before our first dollar is at risk. So the risk return is there for us. Hopefully someday soon we can go back to tilting more towards common equity. But I think that's what's helped us be able to sustain our distributions throughout the past 6 years.
You know what's really interesting about the preferred equity versus common equity? Not even the strategy is most investors don't fully understand the capital stack. Like they
True.
don't understand how much value a property can lose and be wiped out, and then like their position be wiped out before the property actually goes to zero. I had somebody recently write a review and he emailed me. He was like, I put in 100K. I think I'm going to lose 90%. Like I never
Oh,
saw a
wow.
world where I would lose 90%. I thought real estate always had some value, and he was
Yeah.
mixing up the value of the asset versus his position in the capital stack. And
Oh,
so it was a really interesting conversation. And I just kind of, thought about that when you started talking.
yeah. And I
But
actually just interviewed a gal at Bigger Pockets, and I really loved something that she said. She said, when LP investors think of diversification, it's usually across asset classes. So, oh, yeah, I'm in hotels, I'm in VC, I'm in multifamily, I'm diversified, I'm good. But she talked about capital stack diversification. And
interesting.
that's something that we don't think about all the time, but it's true. You need to be diversified across the capital stack too, having that cushion of loss in the preferred equity position, but also being able to take a little bit more risk and being in that first loss common equity position too.
Yeah, that's really interesting. I've never heard anyone bring that up either. That's really
Yeah.
cool. And so, in terms of actual diversification, at Origin, are you guys looking into additional asset classes, or do you guys have your specialty lane and you're staying there and won't be wavered by anything externally? Or what's
Yeah.
the strategy there?
I know it's a common question we get. Our first funds started with asset classes of all kinds, but over the years, we've actually found that it's better to go an inch wide and a mile deep rather than being a jack of all trades. So we build, we buy, we lend, but it's all in the multifamily Class A space. We like multifamily because it's an essential asset class. Everyone needs a place to live. It also has the highest return for the lowest level of risk across any other asset classes. And then in particular, we're targeting Class A. So these are typically folks that are renters by choice. They have higher educations, more stable jobs, care about their credit scores, have savings, etc.
Yeah, great stuff. And are you seeing, you mentioned it being a common question. Are you seeing the investors looking for like additional asset classes, or is it more tied to what they see in terms of trends in multifamily? Is it a concerning question when they bring it up to you, or like what is sort of the, I want to say not vibe, but like what is the feeling of the conversation when they bring that question up?
Sure. I guess I was focusing more on the sponsor side of the equation. So when people are bringing us deals, they're asking us, oh, will you entertain this hotel deal
Got it.
or student housing deal? I think for the multifamily asset class right now, headlines are showing everything is overbuilt, everything is oversupplied. And I always like to challenge that with, well, what about the whole equation? Because yes, there is supply, but there's also demand. So what does supply and demand look like together in terms of the multifamily absorption and the multifamily demand and supply? Because I think it's so easy to just focus on one side without considering the other. But multifamily has many tailwinds, in our opinion, in the coming years.
Yeah, that's great stuff. And thanks for going into that and clarifying the difference you meant there. And I would love to kind of dive a little more into your background. Obviously, this is a relationship business and trust is at the center of it. You know, I see a lot of things online about people trying to automate the IR process, and I just don't think it's going to happen because this is 100% a relationship business. And every time I see you online, you're doing something cool, you're flying somewhere cool. And I'd love to kind of learn a little bit about that passion and how it relates to your journey into your role here. And, want to talk a little bit about that?
Sure. I think it might sound a little bit cheesy, but I do think it has to be innately you leading with good intentions. So for me, what fires me up, what brings me joy is finding where someone has been, where they want to go, and how I can help play a part in that. That's just what my heart leads with. And I think you can, on the other side, for example, if you don't lead with that, if you're leading with just the sales or the commission, you have that, what do they call, like sales commission breath on you. It's very
Yeah.
off-putting. It's very obvious. So I think it's always just leading with genuine curiosity. And it's hard. And I just try to put myself in their shoes. And I know that how hard it must be to have this wealth that you've worked so hard for and just trusting wiring over
Yeah.
$100,000 to someone that you just found online. There's a lot of scams out there. You never know if there's Ponzi schemes or some sponsors get a bad reputation and that puts a sour taste in people's mouth. So just being able to be in person when I can, as much as we try to replicate in-person interactions, nothing will ever replace it, in my opinion. So as much as I possibly can, I do try to offer up in-person meetings with people just because, like you mentioned earlier, trust is the name of the game. And there's no way to build trust stronger than meeting in person, face to face, making sure that you are a real human.
Yeah, that's awesome. Do you do many of those face-to-face meetings? Is that, or is it mainly through Zoom? So you're physically meeting some of your investors.
Yes, I try to meet my investors, especially now at Origin. I've known some of these folks for 6 years now, and it's crazy. I
Wow.
feel like I know what's going on in their lives, but I've never actually met them. So I have made a bigger push in recent years to go and meet them in person. I'll try to go to a market for 48 hours and see how many meetings I can stack in it. I was in LA earlier this year, and in 2 days, I met with 8 investors, and LA is a big
Cool.
place. So I was
Yeah.
driving all over the place to try and meet them. And it's true what they say about LA traffic. That is no joke.
Yeah, no, that's my nightmare. I'll stay like in a little small town in New England. That's
Yeah,
more my
yeah.
speed. That's really cool. I hear a lot of LPs, going into territory, but I don't hear many GPs, you know, actually initiating travel to go meet their investors at their home base. So that's pretty cool. That's interesting.
Yeah, I think it goes back to your earlier question, what do you think helps Origin grow? And I think it really is just relationship building and making sure that you're leading with a client first approach.
Yeah, that's great. And you may not know this may be a deep question for just on the fly, but do you know when you think about client first and like all of those meetings you're having, are the majority of Origin investors repeat investors, or are you guys constantly going out sourcing new investors? Like, what does that balance look like? Even if it's just high level without knowing the exact numbers.
I would say a lot of it is referral based or investors who stay with us, reinvest in our funds in more of that lane than new investors. Again, it goes back to trust building. If I find someone online versus if someone tells me, oh, you should check out this investment opportunity, this one is probably going to have a higher weighting. So I would say it probably does lean more on repeat or referrals.
Sure. And do you guys do much like top of the funnel marketing and things like that?
We have a great marketing team. They focus a lot on top of funnel, on SEOs, on seeing what conferences might make sense. So more of that sort of, or rather, they entertain that sort of top of funnel lead
Sure.
acquisition for us. It's been tough in recent years as compared to when I first started
Oh,
because
yeah.
of where the economy is, but it's definitely something that we still entertain.
Yeah, we're seeing more LPs essentially enabled with more information, so they're
Sure.
having like additional ability to shop, right? To
Yeah,
essentially position the experience of one GP, the returns of one GP with the potential of
got
another.
it.
Are you seeing that trend with investors, or are you really seeing that as, hey, since the majority of our investors are repeat, it's essentially a singular path to working with us?
Sure. It's also interesting now because you have AI, and AI has come up a lot in my conversations recently. If I ask someone how they found us, they'll say, "Oh, ChatGPT." I
So
asked
cool.
ChatGPT who are the top real estate syndicators or sponsors, and your name came up. So it's just a crazy different world in that respect. And yes, there's definitely always going to be competition, but it's just a matter of highlighting what you do. Me again, like leading with good intentions. This is what I would tell my family, my friends when I'm evaluating an investment opportunity. And then, like I also started off the conversation with, just allowing them to go through their process, their due diligence, education, and ultimately making a decision that's best for them. Because I personally don't want to shove a product down someone's throat that's not for them. If we're not a good fit, or if someone wants something outside of multifamily, or if they want a more risky investment, then I say we might not be for you. And
Yeah.
being able to say no to someone is really important. Of course, you want to be able to help them, but again, I just don't believe in shoving something down someone's throat that's not for them.
Yeah, yeah, for sure. And that was a bit of a weird question on my end, but I would love to. You mentioned AI, and we've talked to quite a few people who are on the GP side as well as the LP side that are leveraging AI and building out models to do due diligence. How are you guys adopting it internally, or what does that look like for you guys?
We do. We have a proprietary in-house AI tool. It's called Multilytics. It helps
Nice.
us with our rent growth projections currently, and we're looking to make that a little bit more robust. But it analyzes 3 billion pieces of data, and it goes smaller than the zip code level. And we always look back at our prior year projections to see how we performed against actual. Last year, we deviated about $6 from the actual. So it is an incredible tool that we have found to be very useful. Actually, back in 2020, 2021 era, we were one of the only people predicting negative rent growth in Austin. And when we had conversations with potential investment partners, they would laugh at us, not on the LP side, but on the other side of the house.
Yeah.
And fast forward, that's exactly what happened. So it's funny to think about now, but that's an AI tool that we've made.
That's awesome. Smaller than the zip code is pretty powerful. Find out what the neighborhood's doing. That's cool. Okay. Bill, I know we're coming sort of towards the end of the call. I have to ask the one question I ask on every call. It's my favorite question. What part of passive investing do you think needs to die?
I think lately sponsors are seen as villains. For example, this week in the Wall Street Journal, there was the rhetoric out there that 401ks might be open to the private markets. And I just don't know why we have to villainize private investments. I don't know why headlines have to just go in one way versus another. Yes, there might be some bad actors out there, but there's also some entrepreneurs who are trying to help make a difference and doing things right. And that's when I think educating yourself is important. I know that there was also another headline out there that was talking about single family homes and how investors are getting a little bit more market share. But if you dig into the data a bit more and actually question it, they're not gaining massive market share. It's because the data focuses on the share of home sales. And it's up a bit because of the owner occupied housing being down. Jay Parsons, who I'm sure a lot of people know,
Yeah.
he had this whole post about how investor purchases of single family homes are at its lowest since 2013. So again, it just goes back to getting both sides of the equation, make sure you're digging into the data, see how they're coming up with the numbers. But I don't think that all sponsors are bad. And I think it's important that even though private investments aren't registered with the SEC, two big scandals, meaning Enron and Bernie Madoff, were registered with the SEC. So That doesn't necessarily guarantee you any safety. SEC doesn't audit financial statements. It just requires you to have an independent auditor, which most funds have if you ask. So private side, typically subject to anti-fraud provisions of the federal security laws. So all to say, not all sponsors are evil.
Yeah, I 100% agree with that. And I say it often, like the headlines are clickbait, right? It's just
Exactly.
what will terrify someone enough into clicking because they will get paid on that. And the purpose of Invest Clearly is I always tell people not to be the GP reaper because there are great GPs out there. There are great GPs out there, and sometimes it's hard to find when you're sifting through the noise. And to your point, it's like data isn't data. Everyone says like the numbers are numbers, but it's not really. The data is essentially like fuel the story.
Yeah.
Right? Is so like, can you manipulate the data to fit your narrative and then tell a story around that? And that's what people click on, right? And then
Exactly.
the headlines don't actually represent reality. It's a small sliver of a manipulated reality that can then drive traffic. And so
Right.
I'm with you 100%. And I hope like the actions of one don't cast a shadow over everyone else because it's not the point of all this,
Yeah.
Yeah. Awesome, Bella. Well, thank you so much for joining. Before we jump, if you want to talk about, I know you've briefly mentioned the open offerings you guys have now. If you want to go into any of those in a little more detail and then how people could get in touch with you, and then we could kind of rock it from there.
Sure, absolutely. Getting in touch with me is super easy. I think LinkedIn is the easiest option out there. Just type in my name, Isabella with one L, Carrasco, Carrasco. Send me a message. I'm happy to send you anything that you might need. For Origin, right now we have a credit fund. So that is a little bit different than other credit funds, not only because we are only one of the ones that focus strictly on multifamily, but we are also one of 25 groups that has access to Freddie Mac K-Series product. And if you look back historically, in its worst performing vintage, it had a loss of 0.04%, which didn't even translate to a loss to the bondholders. And fun fact, we're actually moving that fund to an interval fund, which means you don't have to be a qualified purchaser anymore. You don't have to be an accredited investor, and the minimum investment is only $5,000. So if anyone wanted to get exposed to credit, you can actually buy in for a pretty low cost there. That is hopefully going to be finalized and ready in the next couple of months. A step up in risk is the income fund that I touched on a little bit. We focus on a projection of 9 to 11% there. Again, multifaceted. We want a low volatility, stable investment into real estate. And then anyone that has 1031s, we offer 1031 exchanges via a 721 UPREIT. So that means that you're going to be invested in a single property for a period of 2 years until you then are able to be put into a product that's diversified across many different properties and geographies. So not only are you lowering risk, but you're also helping your liquidity. So for whatever reason you needed a little bit of extra cash, you don't have to then put your property on the market, wait for it to sell. You can have pretty instantaneous liquidity there in terms of the 1031 profile. And then we have our opportunity zone fund for anyone with capital gains.
Very interesting. Awesome. Bella, thank you so much for joining me. Thank you for the support you've showed early on, and I look forward to staying in touch with you.
Sounds great. Can't wait to see where Invest Clearly is a year from today.
Thanks. Me too. Me too. Thank you. Thanks for listening to the Invest Clearly podcast. To find verified investor reviews or to claim your GP profile, please visit investclearly.com. If you enjoyed this episode, please remember to like, subscribe, and leave a review because that's how other people find this show. Till next time, invest clearly.